Hello there, Maverick traders. This is Rob Reinhold. It is April 18th. Tomorrow is monthly options expiration, and we had a pretty interesting day today, even though everything closed pretty flat. In this session, we're going to go over what happened today. We're going to take a look at the markets, the commodities. Then we always look at the market, the fresh set of eyes, throw out everything we believed yesterday, throw it out and reevaluate it. And we're always looking for the best setups, long, short, and sideways.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Right, let's focus first on the numbers. So when we take a look at the numbers, the Dow was flat, S&P down 0.22%, Q's down 0.5%, and the Russell pretty much flat. Oil flat, gold flat. Okay, everything looks flat on the surface, but I want to go in a little bit deeper, because when we take a look at deeper, let's take a look at the advanced decline line. Let's take a look at how many stocks are above and below their 50-day moving average. You can see the advanced decline line was mixed, but we definitely have a bearish market. And what we got today was another gap up and fade. I'm going to show you a chart here in a second. And this is now 4 or 5 days in a row where we've gapped up in the morning and then closed on our lows or close to our lows. That's a really unhealthy thing for a bull market to do. We are no longer in a bull market. We've pierced below that 50-day moving average 4 days ago. So at this point, we are either sideways or bearish. We'll take a look at the charts in a second. We got more strong economic news. The Philly Fed came in much higher than expected. This is on top of a retail sales report earlier in the week that came out much better than expected. So we're getting much stronger economic growth than the Fed wants. That means less rate cuts this year, which is disappointing the market. We also saw Tesla get a major downgrade today, and the Tesla stock is trading at lows as we speak. Let's take a look at these charts. And now what I really want to focus on is the gap up and the fades. The gap up and fades. All right, so 5 candles ago, we actually had a gap down, selling. Gapped up, selling. Gapped up a small amount, selling. Gap up, that was a big gap, selling. Gap up, selling. This is telling you that the sellers are overwhelming the buyers. There are buyers out there, there are people out there buying, but there's just way more sellers. And every time the market opens up, the sellers overwhelm the buyers, and by the end of the day, it is another down day. Now, you could take a look at today's candle and say, well, it wasn't a big, huge red candle. That's true. So the question is that a sign of a turning point, or is that just more of a sign of exhaustion? At this point, I think you have to take a look at it as a sign of exhaustion. At this point, this market is clearly below the 50-day moving average. If we get a bounce back up, that 50-day moving average should become some resistance. So even if we get a bounce, we're still going to need to lean to the bearish side. Coming over here to the Qs, same thing. Gap ups, fall. Sideways, okay, that was a regular day gap up, sell off, gap up, sell off. These are just nasty, nasty candles. There's nothing in these candles that tell us that tomorrow is going to be an up day. Tomorrow could be an up day. We have no idea. But everything I know about candlesticks and charts are telling me that right here, right now, unless something changes overnight, there is clearly a supply and demand imbalance. Way more sellers than buyers. And there's nothing in these charts that are telling me that that is about to end. I need to go into tomorrow thinking it's going to be another down day. And if Friday's a down day, it's probably a gap down on Monday. If we take a look here at the heat map, you can see there's little pockets of green in there. There was some good buying in the financials. Healthcare had a little bit of buying. But where we really saw the big selling, though, was in the big cap tech. And Microsoft, Apple, Amazon, Tesla, you can see that's where some really intense selling was. And even in the semiconductors. Semiconductors had a lot of intense selling as well. Nothing in this chart tells me that we are right about to bounce. Now look, you could say that we're oversold. You could say that the selling has been intense. Yes, I agree with everything you say. Could there be a bounce in the next day or two? Sure, why not? But is there anything in the charts? Like usually we get like a hammer candle. Like a hammer candle would be, oh, there's a telling me that there's going to be a reversal here. If we get a hammer candle, if we get a doji candle, if we get something, then I could say, hey, I think we're close to a bottom here, but we're just not getting anything yet. And I'm going to talk about this at the end. Markets rarely bottom on a Friday. Markets usually bottom out on a Monday or a Tuesday. So going into tomorrow, like I said, I can't say that there's going to be any big bounce whatsoever. Let's take a look at some potential trades. I've got 3 for you. Let's take a look at them. I've got a bull, I've got a sideways, and I've got a bear. Now, bears were very easy to find. They were plentiful. But the bulls were a little bit more difficult to find. And look, and I want to talk about this bull. This is Levi. I want to talk about this bull. Not that like this is a great market to be long in, but as always, we always are carrying some longs and some shorts in our basket trades. A nice little base here, a rising base, takes off to the upside. We pull back to the breakout point. We get a bounce. Look at these candles. We've had 4 down candles all week, and Levi's had 3 up candles. People have been buying Levi regardless of the market condition. Yes, we got a little red candle here. It could very well likely come down a little bit. But look, I'm not looking to be super bullish anything here. I'm looking to be sideways to slightly bullish. For me, I'm looking at something like a 1921 diagonal call spread. It's a pretty wimpy call here. So if it basically just hangs out somewhere in this area, if we just don't crash and go down below moving average, this trade's going to be a decent trade. I'm not looking to be a hero on anything long here. I'm not trying to catch a falling knife. I'm just saying I've got to add some bulls on to counteract my bears. This is one that is a possibility. In the sideways. Now, sideways are always difficult in high volatility. Remember, volatility, I always use the analogy of darts. So in darts, you're trying to hit a bullseye. When you're doing a sideways trade, you're trying to hit a bullseye. You're trying to say, I think this stock is going to close at $19 a share in 2 weeks from now. Now, how close the dartboard is to you is basically your expiration date. So if you're looking to make a butterfly that expires in 3 days, okay, that dartboard is very close. But if you're looking to do 3 months, that dartboard is very far away. That's going to be hard to hit. So the distance of the dartboard, think about that as the time to expiration. There's one other thing about this dartboard is that there's volatility. Volatility is someone is moving the dartboard. Someone is moving it around. And the more volatility is, the more they're moving it like crazy. Your ability to hit that bullseye when that dartboard is moving around like crazy, very, 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 very rare. That being said, the market understands that, so it increases your payout if you do hit the bullseye. But sideways stuff is difficult in a market like this. But I like this trade here. Let me tell you a little bit about this story. JW Nordstrom was looking pretty terrible until they announced that they were looking to take the company private. We had a big surge up, and it really topped out at about $20 a share. Now, look, I know nothing about taking a company private. What I do know is there's a lot of smart people out there that probably think that $20 is about the price, maybe $21 is the price that they might take it private. So as you can see here, this is just a really good wall here up above. And the fact that they have announced that they are looking to take the company private, there's a really nice floor down here at 17. So I like this 17 to 20. I'm going to go to 20. So you've got to pick somewhere in the middle. So you either got to pick an 18 or a 19 strike. With this market being a little bit more bearish, I'm going to go with the 18 strike and do something like a 17, 18, 19. You could do a 16, 18, 20 to make it a little bit wider if you want. This is one of the only ones I like on a sideways trade because I don't think it's trading with the market whatsoever. I think this is on its own path with its own story. And with the bears, there's plenty of bears, but I really like this one, Wolfspeed. This is a semiconductor company. Now think about how hot semiconductor companies have been until lately. So semiconductors have been hot up till a week ago. This thing has been terrible. Now semiconductors are rolling over. We got earnings from ASML, and they were worse than expected. Bookings were lower than expected. So now the whole semiconductor industry stocks, they're falling substantially. And this one never was a good one. Breaking down of its low. I like this one. If this market continues to get worse, I think this thing could easily go to 20. And these are the kind of market situations where I'm willing to get a little bit more bearish. I'll probably look at something like a 20-25 or a 21-25 bear call spread. Again, I like this one to the downside. It looks like it could have some good momentum. Let's talk about tomorrow. Tomorrow we do have monthly April options expiration. Man, it doesn't really mean anything anymore. And most of the time you get the volatility out Wednesday and Thursday. But again, we don't know what's going to happen tomorrow. We did get Netflix earnings after the bell, and Netflix is currently trading down after hours. Right after the bell, right after the announcement, it spiked up about 5%, and then it turned around and lost that 5% and went down 5%. And then it bounced back to almost even, and now it's basically sitting not at the lows, but near the lows. So it's trading down $22 a share when I'm looking at this, down 3.6%. That is not going to be good for the markets if Netflix opens down 3.5% tomorrow. It's probably just going to add to the selling. As I said, markets rarely bottom on Fridays. I'm not saying it's going to be a huge down day. I don't think so. I don't think the energy is there right now. But I could definitely see a weak Friday and potentially an ugly Monday leading to a bottom, or not a bottom, but a bounce somewhere next week. We will update you with everything on the trading room, but this is the market recap. Thanks for joining me. Take care. Goodbye, everyone.